Trinidad and Tobago has ruled Caribbean energy for 60 years. No island nation has ever come close, not Barbados, not Grenada, not the Bahamas. For 6 decades, if your country needed diesel, gasoline, or jet fuel anywhere in this region sooner or later, that fuel traced back to Port of Spain. That ended this year, quietly, almost without anyone outside the industry noticing. Jamaica, a country with no crude oil reserves, no natural gas fields, and a documented history of nearly losing its own refinery to shut down, just signed contracts worth more than $140 million to ship refined oil products to Trinidad and Tobago. Not the other way around. Trinidad is now buying fuel from Jamaica. If that sentence doesn't stop you, you don't understand what it took to get here. So let's talk about what it took. This is not a story about luck. This is not a fluke shipment or a one-off deal that will vanish by next quarter. Jamaica now has structured, recurring export contracts feeding fuel oil into Trinidad's own distribution network, into a country that built its entire modern identity on being the region's energy supplier. And by the end of this video, you're going to understand exactly how a small island, with almost no natural energy resources, managed to outcompete the Caribbean's oil superpower on its own turf. Why this matters far beyond the balance sheet, and why, if you're Jamaican in London, Guyanese in New York, or Trinidadian in Toronto, this is a story that touches your pocket whether you realize it yet or not. Because make no mistake, this is bigger than oil. Before we go further, I want to be upfront about something. This channel exists to give the diaspora the kind of serious, sourced, unhyped analysis of what's actually happening across the Caribbean that you cannot find anywhere else on this platform. Not tourism reels, not clickbait, real economic and geopolitical reporting done properly. We're building toward 10,000 subscribers, and every single one of you watching right now, especially if you've been here before, gets us closer. If that's the kind of channel you want to exist, hit subscribe. It costs you nothing, and it tells the algorithm to keep putting stories like this one in front of people who actually care about the region. Now back to Jamaica. To understand why this moment matters, you need to go back more than 40 years, to a decision that at the time looked reckless. In the early 1980s, Jamaica was a country entirely at the mercy of the global oil market. No crude reserves, no refining capacity, no leverage. Every gallon of gasoline, every barrel of diesel, every drop of jet fuel came from somewhere else, purchased at whatever price the international market demanded, subject to whatever supply disruptions the world decided to throw at a small, vulnerable island economy. When oil prices spiked, Jamaica had no choice but to absorb the shock. When shipping routes were disrupted, Jamaica waited in line behind bigger, wealthier buyers. This is what energy dependency looks like in practice. It is not abstract. It is inflation at the pump. It is higher costs for buses and taxis and cooking gas. It is a government with less room to maneuver, because so much of its foreign currency is leaving the country just to keep the lights on. So Jamaica made a bet. The government built a domestic refinery in Kingston and called it Petrojam. The idea was simple in theory and brutally difficult in practice. Import raw crude oil instead of finished fuel, refine it domestically, and capture the margin, the profit, that would otherwise belong entirely to foreign refiners. It should have worked cleanly. It didn't. For most of its existence, Petrojam was treated, fairly or not, as a national headache. Critics questioned whether Jamaica had the technical capacity to run a refinery at all, and in the early years, that was not an unreasonable question. Refining is not like most industrial activity. It requires specialized engineers, continuous process monitoring, rigorous safety protocols, and an institutional culture capable of managing genuinely hazardous processes at scale, 24 hours a day, every single day of the year. Building a physical refinery is one challenge. Building the human expertise to run it safely and profitably, generation after generation of engineers and technicians, is an entirely different and arguably harder challenge, and it is the one that gets underestimated by outside observers looking only at the concrete and steel. There were years of underperformance, disputes over management, questions about transparency, and periods where the facility ran so far below capacity that shutting it down entirely was a live, serious political option debated openly in Parliament and in the press. Oil price crashes gutted refining margins to almost nothing, sometimes for years at a stretch, turning what should have been a profitable national asset into a facility that barely broke even or lost money outright. Maintenance backlogs piled up during periods of tight government budgets, creating a vicious cycle where deferred maintenance led to more frequent breakdowns, which led to lower output, which led to weaker financial performance, which made it even harder to justify the capital spending needed to fix the underlying maintenance problem in the first place. More than once, credible people inside and outside government argued that Petrojam had become exactly what critics predicted at the outset, an expensive, underperforming asset that drained public resources without ever delivering the payoff it promised. There were governance controversies, too, the kind that make headlines and erode public trust. Questions about procurement practices, questions about executive compensation relative to performance, questions about whether the facility's leadership structure had the right incentives and the right accountability. These were not manufactured criticisms. They were real, and they were debated seriously by people who genuinely wanted Jamaica to succeed but doubted this particular vehicle was the right one to get there. At various points, serious proposals were floated to privatize the refinery entirely, to sell it to a foreign operator who might run it more efficiently, or simply to shut it down and return to full dependency on imported refined fuel, accepting that Jamaica might never be a country capable of running this kind of facility on its own terms. Here's the part of the story most people miss. Jamaica didn't shut it down. Through changes in leadership, through management reform, through decades where the facility's future was genuinely uncertain, successive governments kept Petrojam alive. Not because the numbers always justified it in the short term, but because someone, somewhere in Jamaica's policy apparatus, understood something that takes real discipline to hold on to. Strategic infrastructure does not pay off on a 4-year election cycle. It pays off over decades if you're patient enough and disciplined enough to survive the years when it looks like a mistake. 4 decades later, that patience is the entire reason this story exists. Because right now in 2026, Petrojam is not just supplying Jamaica's own fuel needs, it is exporting. And the country buying from it is the one country in this region that was never, ever supposed to need Jamaican fuel, Trinidad and Tobago. Let's get into the actual contracts, because the numbers here matter, and I want you to understand them the way an economist would, not just as headline figures. Jamaica has signed 2 separate export agreements with Trinidad and Tobago. The first is valued at approximately $90 million, covering close to 1 million barrels of fuel oil products. The second is a 6-month arrangement with Paria Fuel Trading, Trinidad's state-owned fuel distributor, worth just over $50 million for 540,000 barrels. These are not experimental one-off shipments. These are structured, recurring contracts generating consistent monthly revenue. Break down the larger deal and you're looking at roughly $90 per barrel at current pricing, which means Jamaica is earning somewhere between $5 and $8 million every single month from that contract alone. The Paria arrangement adds 90,000 barrels a month, worth approximately $8.3 million monthly for 6 consecutive months. Add it together and you get more than $140 million in foreign exchange flowing into Jamaica. Convert that to local currency, and you're talking about over 20 billion Jamaican dollars entering the economy directly from oil exports. 20 billion Jamaican dollars is more than the entire annual budget of several government ministries combined. This is not a footnote in Jamaica's economic story. This is one of the headlines. And here's what makes it genuinely remarkable rather than just a good news story. These Trinidad contracts are not isolated. Since 2024, Petrojam has exported approximately 4.5 million barrels of fuel products across various destinations, generating more than $500 million in foreign exchange earnings. $500 million from a country that a generation ago was spending hundreds of millions annually just importing the fuel it needed to survive. Read that trajectory carefully because it tells you everything. Jamaica did not stumble into one lucky contract. Jamaica built, over decades, the operational capability to become a consistent, reliable regional fuel exporter, and it is now converting that capability into a growing, diversified revenue stream, contract after contract, year after year. Now let's talk about how the actual process works, because understanding the mechanics is what separates real analysis from headline repetition. Crude oil arrives in Jamaica, typically from producers in South America, and is delivered to Petrojam's facility on Kingston Harbor. The refinery processes roughly 35,000 barrels of crude per day, though actual throughput shifts depending on maintenance schedules and market conditions. Once that crude arrives, it goes through a refining process that separates it based on molecular structure and boiling point into distinct products: gasoline, diesel, jet fuel, liquefied petroleum gas for cooking, and several grades of fuel oil. The fuel oil is the product at the center of this story. These are heavier petroleum products used primarily as bunker fuel, the fuel that powers cargo ships and tankers as they move across the region. There are different grades here that matter more than you'd think. Very low sulfur fuel oil meets strict international environmental standards introduced in 2020 by the International Maritime Organization, which capped sulfur content in marine fuel at 0.5%, down from 3.5% previously. That single regulatory shift created enormous global demand for compliant fuel, and refineries capable of consistently producing it gained a real competitive edge. Petrojam has proven it can meet that standard. That is precisely why Trinidad wants what Kingston is producing. The Caribbean has enormous demand for this kind of marine fuel. Heavy maritime traffic, cruise routes, cargo shipping lanes, and proximity to the Panama Canal mean ships are constantly refueling somewhere in this region. Ports capable of reliable bunkering have a genuine durable advantage. Once refined, Petrojam's products sit in storage tanks at the Kingston terminal until a buyer like Paria places an order. The fuel is pumped into tanker ships, which carry it across the Caribbean into Trinidad's own distribution system or directly into maritime bunkering operations. Here is the distinction that actually matters, and it's one most coverage of this story completely misses. Jamaica is not simply buying finished fuel from one country and flipping it to another. That would be arbitrage, and the margins on arbitrage are thin and unstable. What Jamaica is doing is importing raw crude, adding real value through the refining process, and exporting a higher value finished product. That refining margin, the actual profit generated by the transformation from crude to finished fuel, stays inside the Jamaican economy. This is industrial value creation in its purest form. This is the exact kind of economic activity that builds skilled employment, strengthens a currency, and improves a country's actual position in global trade, not just its headlines. Now, let's talk about the buyer, because who is purchasing this fuel is just as important as the fact that they're purchasing it at all. Trinidad and Tobago is not an ordinary customer. For more than 60 years, Trinidad has been the undisputed energy powerhouse of this region. The twin island nation sits on substantial offshore oil and gas reserves, operates multiple refineries of its own, and ranks among the world's leading exporters of liquefied natural gas. Trinidad's Pointe-à-Pierre industrial estate is one of the most significant petrochemical complexes in the entire Western Hemisphere. This is a country that built its modern economy, its entire national identity in many ways, around being the region's energy supplier. For decades, Trinidad fueled not just Jamaica but Barbados, St. Lucia, Grenada, the Bahamas, even parts of Central America. So when Jamaica starts selling fuel to Trinidad, that is not a minor reversal, that is a structural shift in a 60-year hierarchy. To be clear about what this does not mean, Trinidad has not run out of oil. Trinidad has not lost its refining capacity. Trinidad still produces vastly more energy than Jamaica ever will, and will for the foreseeable future. What it does mean is that Jamaica has reached a level of operational reliability, consistency, and cost competitiveness that even a major regional energy producer finds it economically sensible to buy specific products from Kingston rather than manufacture everything domestically. Why would Trinidad do that? There are several plausible, non-mutually exclusive reasons, and understanding them tells you something important about how modern energy trade actually works. First, refining is capital-intensive and operationally complex, even for producers with abundant crude. Sometimes it is genuinely more efficient for a country to import specific finished products than to run every refining unit at full capacity across every product line all the time. Trinidad's own refineries may be optimized for certain fuel types, making it more economical to import others from a nearby reliable supplier. Second, Petrojam may simply have excess capacity in specific product grades that Trinidad currently needs, creating a natural complementary trading relationship rather than pure competition. Third, geography matters enormously here. The shipping distance between Kingston and Port of Spain is short, which keeps transport costs low and turnaround times fast. letting Trinidad maintain lower inventory levels while still guaranteeing supply security. And fourth, diversifying suppliers is simply good risk management. By sourcing fuel from more than one facility, Trinidad reduces its exposure to any single point of failure, whether that's a maintenance shutdown, a labor dispute, or a supply disruption at its own plants. Whatever the precise mix of reasons, the fact remains unchanged, and it is worth sitting with for a moment. Trinidad and Tobago, the undisputed energy giant of the Caribbean for 60 straight years, is now a customer of Jamaica. Not a rival being talked about in the city breath, an actual paying customer. That shift is not only economic, it is symbolic in a way that matters for how this entire region sees itself. Now here's where I want to pause and ask you something. Because I say this every video and I mean it every time, why should you care about this? Maybe you're watching from London, and Jamaica's oil refinery feels like a distant headline. Maybe you're in Toronto, and Trinidad's energy sector has never touched your life directly. I want to walk you through exactly why this story reaches into your household. Wherever you are, start with the currency. If you send money home, and most of you watching this do, you already know that the value of that transfer depends entirely on the strength of the Jamaican dollar against whatever currency you're earning abroad. Every remittance you send gets converted, and the exchange rate at that moment determines how far your money actually stretches for your family back home. Foreign exchange earnings, dollars coming into a country from exports like these oil contracts, are one of the primary tools a central bank has to defend its currency. More foreign exchange means more stability. More stability means your money holds its value better between the moment you send it and the moment your mother, your cousin, your grandmother actually spends it. This is not abstract macroeconomics. This is the difference between your remittance covering the light bill and coming up short. Then there's reputation, and I don't mean that in a soft feel-good sense. I mean it in a very concrete financial sense. When international investors, when credit rating agencies, when multinational companies look at a country and decide whether to put capital into it, they are looking for exactly this kind of story. Evidence of institutional capability, evidence that a country can execute complex industrial projects over decades and deliver results. A small island successfully operating a refinery and exporting to a regional energy giant is the kind of proof point that gets mentioned in investment committee meetings you will never see in credit assessments that determine how expensive it is for Jamaica to borrow money on international markets, in decisions about where the next factory, the next call center, the next logistics hub gets built. Every time Jamaica's name comes up in a positive light on the world stage, it makes the next investment conversation a little bit easier. And finally, there's opportunity, direct and personal. Petrojam employs hundreds of people in highly skilled technical roles. Process engineers, chemical engineers, maintenance technicians, quality control specialists, logistics coordinators. These are not minimum wage positions. They require real technical training, and they pay well above the national average. If you are diaspora with technical skills, with engineering backgrounds, with logistics or supply chain experience, and you've ever thought about what it would look like to bring that expertise home, this is exactly the kind of growing industrial sector where that conversation becomes realistic rather than theoretical. Beyond direct jobs, there are entire supply chains growing around this: trucking, maintenance contracting, engineering services, port operations, insurance, logistics. Every dollar this refinery earns circulates through the broader economy multiple times over. So when I say this story matters to you, I mean it in all three of those ways simultaneously. Your remittance, your family's sense of where Jamaica stands in the world, and your own potential opportunity, if you're building toward a future that involves the region. Now let's get back into the mechanics of what's actually happening economically, because there's more here than the headline contracts. Let's talk about foreign exchange reserves specifically, because for a small island economy, this is one of the single most important indicators of national financial health. These reserves, held by the central bank, are what stabilizes the national currency, manages inflation, funds essential imports, and services foreign debt obligations. Strong reserves mean a more stable currency, lower inflation, and higher investor confidence. Weak reserves mean currency depreciation, rising import costs, accelerating inflation, and economic instability that ripples through every household in the country. Jamaica has historically struggled with exactly this kind of foreign exchange volatility. The Jamaican dollar has depreciated significantly over past decades, and managing that depreciation has been a persistent, difficult challenge for every government that has held office. Every additional reliable source of foreign exchange earnings strengthens the central bank's hand and its ability to intervene in currency markets when volatility hits. The $140 million from these Trinidad contracts alone provides meaningful, tangible support to Jamaica's reserve position. Combine that with the hundreds of millions generated from Petrojam's broader export activity, alongside tourism revenue, remittances, and bauxite exports, and Jamaica's overall foreign exchange position becomes materially stronger than it was even 5 years ago. Then there's industrial diversification, which is a less flashy story but arguably a more important one for Jamaica's long-term resilience. Jamaica's economy has traditionally leaned on a fairly narrow set of export sectors. Tourism is the largest by far, accounting for a substantial share of GDP and employment. Bauxite and alumina drawn from Jamaica's extensive mineral deposits form another major pillar. Remittances from the diaspora, from people exactly like many of you watching, provide crucial ongoing foreign exchange. Agriculture, particularly sugar, coffee, and specialty crops, sustains rural livelihoods across the island. But beyond these sectors, Jamaica has historically struggled to develop large-scale manufacturing or industrial exports of real significance. Petrojam's oil exports now represent a genuine diversification of that export base, and the nature of that diversification matters. Tourism is vulnerable to global downturns, pandemics, natural disasters, and shifting travel patterns, as the world learned brutally in 2020. Bauxite faces long-term uncertainty tied to global aluminum demand and mounting environmental pressure. Refined petroleum products, by contrast, are driven by transportation, shipping, and industrial demand that remains comparatively stable even through economic turbulence. Oil exports function as a counterbalance to Jamaica's more volatile traditional sectors, reducing overall economic risk and building a more resilient national economy, one less dependent on any single source of foreign income. Geography plays a role here that's worth understanding properly. Jamaica sits at a genuinely strategic position in the Caribbean, close to major shipping lanes connecting North America, South America, Europe, and Asia via the Panama Canal. Thousands of vessels pass through or near Jamaican waters every year, and a significant number of them need refueling. Kingston Harbor is one of the largest natural harbors in the world, capable of accommodating the largest cargo ships and tankers operating today. The infrastructure already exists. The port facilities are modern. The regulatory environment is stable. All of this makes Jamaica a genuinely attractive location for maritime bunkering services. And if Petrojam can expand its role as a bunker fuel supplier, the revenue potential grows substantially. Ships currently refuel across various Caribbean ports, including Panama, Caracas, and Trinidad itself. If Kingston captures even a modest share of that existing market, the economic impact compounds quickly. Bunkering, to be clear, is a high-volume, low-margin business. It is not going to generate massive per-barrel profits. But at scale, consistent high-volume bunkering generates substantial revenue and creates significant downstream economic activity, which is precisely the kind of steady, compounding growth that builds a resilient economy over time rather than a spectacular but fragile one. Looking ahead, the growth potential here is genuinely considerable. Petrojam's current capacity sits at roughly 35,000 barrels per day, but there is real room for expansion and technical upgrades. If capacity were doubled through capital investment, export volumes could scale proportionally, potentially pushing annual export revenues into the billion-dollar range. At that scale, oil exports would begin to rival tourism itself as a source of foreign exchange, which would represent a fundamental transformation of Jamaica's economic structure, not just an incremental improvement. That kind of expansion requires real investment, upgrading refining units to handle different crude grades, installing more advanced environmental controls to meet increasingly strict international standards, expanding storage capacity, and improving logistics systems throughout the supply chain. But the underlying business case is compelling. Demand for refined products across the Caribbean remains strong and is projected to grow as regional economies develop and maritime traffic increases further. There is also real opportunity in product diversification. Currently, Petrojam focuses primarily on transportation fuels and bunker oils, but refineries are capable of producing a much wider range of specialty products, from petrochemical feedstocks to lubricants to asphalt. If Jamaica develops expertise in these higher-value specialty products over time, the economic returns could be significantly greater than what current exports are already generating. Of course, none of this comes without real challenges, and I'd be doing you a disservice if I didn't lay them out honestly. Operating a refinery is inherently complex and carries real operational risk. Equipment failures, process upsets, safety incidents, and environmental releases are constant concerns requiring vigilant, disciplined management. Global oil markets are volatile by nature, and refining margins can compress rapidly during periods of oversupply or weak demand. Competition from larger, more efficient refineries in other regions remains intense. Political and regulatory shifts, both in Jamaica and among trading partners, can affect operations in ways that are difficult to predict. Petrojam has faced every one of these challenges at various points across its 4-decade history, and it will continue to face them going forward. There is no guarantee that this current success streak continues uninterrupted. But the broader trajectory, the pattern across 4 decades, is unmistakable. Jamaica has successfully transformed a strategic industrial asset, one that was questioned, criticized, and nearly abandoned multiple times, into a genuine revenue-generating export platform. The refinery that skeptics wanted shut down in the 1990s is now a cornerstone of national economic strategy in 2026. The contracts with Trinidad and Tobago function as both validation and proof of concept simultaneously. They demonstrate that Jamaica can compete directly in regional energy markets. They demonstrate that Petrojam's operations meet genuine international quality and reliability standards. And they demonstrate that Jamaica has carved out a sustainable, defensible niche in Caribbean trade that did not exist a generation ago. I don't think the symbolism of this should be understated, and I want to say this plainly. For a small island nation of under 3 million people to successfully operate a complex industrial facility and export finished products to a regional energy giant is genuinely remarkable. It speaks to the quality of Jamaica's technical workforce. It speaks to the effectiveness, however uneven and imperfect, of sustained industrial policy over the long term. And it speaks to the resilience of institutions that kept this refinery operational through decades when closing it down would have been the easier, more politically convenient choice. This is also, fundamentally, a story about patience, and I think that's the part worth sitting with the longest. Petrojam was built in the 1980s. For many of the years since, its contribution to the national economy was modest at best, and its future was genuinely uncertain. There were real periods when shutting the refinery down looked like the reasonable, fiscally responsible decision. But successive governments across different political parties and different economic philosophies maintained the facility, invested in upgrades when the budget allowed, and preserved the institutional knowledge necessary to keep it running through the difficult years. That persistence, held over 4 decades, is what's paying dividends right now, in 2026, in the form of a $140 million contract with the one country in this region that was never supposed to need Jamaican fuel. The lesson here extends well beyond oil. Strategic infrastructure of almost any kind often takes decades to fully mature, and the temptation to abandon these projects during the inevitable difficult periods has to be resisted if the long-term payoff is ever going to materialize. That's a genuinely difficult thing to ask of any government operating on short election cycles and immediate public pressure. Jamaica's experience with Petrojam offers a real lesson for other small island nations across this region as they grapple with their own questions of energy security and long-term economic development. Building domestic refining capacity, or any comparable strategic industrial capability, is expensive and technically demanding, but it can fundamentally alter a country's economic trajectory. If the scale of investment is matched sensibly to the size of the domestic market and its realistic potential for regional exports, if technical and managerial competence is genuinely prioritized, and if political commitment survives the inevitable periods of difficulty and doubt, it's worth pausing here to understand exactly how dominant Trinidad has been, because that context is what makes Jamaica's breakthrough genuinely significant rather than a minor regional footnote. Trinidad's liquefied natural gas exports alone have, for years, made it one of the largest LNG exporters in the world relative to its size, supplying markets not just across the Caribbean but as far as Europe and Asia. The Point Lisa's industrial estate hosts some of the largest ammonia and methanol production facilities on the planet, built specifically to take advantage of Trinidad's natural gas reserves. This is not a small player pretending to be significant. This is a country that, on a per capita basis, has punched dramatically above its weight in global energy markets for 2 generations. When people talk about Caribbean energy, they are, more often than not, actually talking about Trinidad specifically, because for most of modern Caribbean history, there hasn't been a meaningful second option. That's precisely why this shift matters as much as it does. Jamaica is not claiming to replace Trinidad, and nothing in these contracts suggests that ambition. What Jamaica has done is something more specific and, in some ways, more impressive. It has found a genuine niche within Trinidad's own dominant market, a specific product category where Kingston's operational reliability and geographic position make it the more sensible choice, even for the region's energy superpower. That is a fundamentally different achievement than simply producing more oil. It is a demonstration of competitive positioning, of understanding exactly where you can add value inside a market controlled by someone far larger than you, and executing on that understanding with enough consistency to win recurring, structured contracts rather than one-off opportunistic sales. There's a parallel worth drawing here to what's happening elsewhere in the region, because it illustrates a broader pattern in how smaller Caribbean economies are starting to compete more intelligently rather than simply accepting dependency as permanent. Guyana, sitting on one of the largest offshore oil discoveries in the world over the past decade, has faced its own version of this challenge. How does a small nation with limited institutional capacity extract maximum long-term value from a resource windfall, rather than simply exporting raw crude and letting foreign companies capture most of the value chain, the way so many resource-rich developing nations have historically done? The questions Guyana is wrestling with around diaspora bond transparency, around ensuring that citizens abroad can meaningfully participate in and verify how oil wealth gets deployed, echo the same underlying challenge Jamaica faced with Petrojam decades earlier. How do you build institutions capable of capturing and managing value over the long term, rather than simply extracting a resource and hoping the benefits trickle down? Jamaica took 40 years to answer that question with Petrojam. Guyana is trying to compress a similar institutional maturation process into a fraction of that time, under far more intense international scrutiny, given the scale of the reserves involved. The regional implications of this shift extend further than just Jamaica and Trinidad, and I think this next part is genuinely important for understanding where this region is heading. For decades, Caribbean energy trade has operated on a hierarchical structure, with Trinidad firmly at the top as the dominant, essentially unchallenged supplier, and virtually every other island functioning as a dependent customer. That structure is now slowly, visibly changing. Jamaica's emergence as an exporter is part of a much broader trend toward more diversified, more multipolar energy trade across this region. Guyana's oil discoveries are adding an entirely new major producer to the regional mix, one whose long-term scale could eventually dwarf both Trinidad and Jamaica combined. Suriname is developing its own offshore reserves. Barbados is investing seriously in renewable energy, while exploring its own offshore potential. The Caribbean energy landscape, taken as a whole, is becoming more complex, more genuinely competitive, and potentially far more resilient as supply sources multiply across the region rather than concentrating in a single country. This diversification benefits nearly everyone across the region simultaneously. It reduces the risk of supply disruption from any single source. It encourages more competitive pricing across the board. And critically, it creates real opportunities for smaller nations to actively participate in energy trade, rather than simply consuming imported products indefinitely, at the mercy of whatever the region's dominant supplier decides to charge. Jamaica's success with Petrojam could realistically inspire similar strategic investments in other countries across the region, gradually building toward a more integrated, more self-sufficient regional energy system over the coming decade. There's a broader point worth making here about how the global economy actually works, and it's one that gets lost in most conversations about oil. We tend to focus overwhelmingly on crude oil production itself, on the activities of major oil companies, on geopolitical conflicts over raw resources. But refining is where crude oil actually becomes useful to anyone. It's the refining process that transforms raw crude into the gasoline that powers your family's car, the diesel that moves the trucks carrying groceries to the supermarket, the jet fuel that flies the plane you take home to visit relatives, the bunker fuel that propels the cargo ships keeping this region's economies connected to the rest of the world. Refineries are the critical link between raw resources and actual economic activity, and countries that control meaningful refining capacity hold real economic and strategic advantages that countries without it simply do not have. Jamaica has learned this lesson, slowly and expensively, but thoroughly. By building and, crucially, maintaining Petrojam through decades when doing so was not obviously the right call, the country has captured a piece of the value chain that would otherwise have belonged entirely to foreign corporations. Every barrel refined in Kingston is a barrel that does not need to be refined somewhere else and imported back at a markup. Every dollar of refining margin that stays inside Jamaica is a dollar that can, in principle, be invested in education, in healthcare, in infrastructure, or in reducing national debt. Over time, those dollars compound into something that starts to look like real, durable national wealth, rather than a temporary windfall. The $140 million from these Trinidad contracts is, genuinely, just the beginning of what this could become. If Jamaica can sustain operational excellence at Petrojam, continue securing export contracts at this pace, expand capacity over the coming years, and develop real expertise in higher-value specialty products, this single facility could generate billions of dollars in cumulative revenue over the coming decades. That would represent one of the most successful long-term industrial projects in Caribbean history, a genuine testament to what strategic planning and persistent execution can accomplish, even for a country that started with almost nothing in the way of natural energy resources. Now, before I close this out, I want to step back from Jamaica specifically for a moment and talk about how this kind of story tends to get covered across this region, because it matters for how you evaluate what you're watching on this channel and elsewhere. There is a particular style of Caribbean content that has become extremely popular over the past few years, and you've almost certainly seen it. Big bold numbers on a thumbnail, a dramatic face, a single punchy question designed to make you click before you've had time to think about whether the underlying claim is even accurate. Channels built entirely around headline economic figures, oil discoveries, GDP growth percentages, presented with maximum excitement and minimum context. That style works. It gets views. There's a reason it's everywhere, and I'm not here to pretend otherwise or act superior about it, but there's a real cost to that approach, and it's one worth naming directly. When every video promises the region is about to become the richest place on Earth, when every discovery is framed as history's greatest windfall, when every statistic gets stripped of its context and blasted across a thumbnail for maximum emotional impact, something important gets lost. You stop being able to tell the difference between a genuinely significant development, like a small island nation successfully outcompeting a 60-year regional energy hegemon, and a routine announcement dressed up to look historic because hype performs better than nuance. Everything starts to sound the same. Everything becomes unprecedented and shocking and unbelievable, and eventually those words stop meaning anything at all, which is exactly the opposite of what serious analysis is supposed to do for you. This channel takes a different approach, deliberately. Every figure I give you in this video, the $140 million, the 4.5 million barrels since 2024, the 35,000 barrel daily capacity, comes from verified reporting, not estimation dressed up as fact. When something is uncertain or projected rather than confirmed, like the potential for capacity expansion or future billion-dollar revenue scenarios, I tell you explicitly that it's a projection, not a done deal. That's slower. It's less immediately thrilling than a thumbnail promising an economic miracle. But it's the only kind of analysis that actually helps you make real decisions, whether that's deciding where to send remittances, deciding whether a business opportunity in the region is worth pursuing, or simply deciding what to believe about your own country's trajectory when family members ask you what's really going on back home. I'd rather build a smaller, slower-growing channel on that foundation than a bigger one built on manufactured urgency. That's a real trade-off, and I want to be honest with you that it is one. But I think it's the right one, And it's why we're asking you to be part of building this toward 10,000 subscribers rather than chasing viral numbers through the kind of shortcuts that ultimately erode trust with exactly the audience this channel exists to serve. There's one more thing worth understanding before we close, and it's the question of what happens next, because a story like this doesn't end with a single contract announcement. Watch for a few specific signals over the coming months if you want to track whether this trend has real staying power or whether it's a temporary alignment of circumstances. Watch whether Petrojam secures additional contracts beyond Trinidad, with other Caribbean nations or even destinations outside the region entirely. Watch whether Jamaica announces concrete capital investment plans to expand refining capacity beyond the current 35,000 barrels per day, because talk of doubling capacity means very little until actual investment commitments are made and construction begins. Watch whether Trinidad's own energy sector responds competitively, whether Point Leases ramps up output to reclaim lost market share, or whether Trinidad quietly accepts that a more diversified regional energy market, one where it's no longer the only serious player, is simply the new reality it has to operate within. And watch Guyana, because as that country's oil production continues scaling toward levels that could eventually dwarf both Trinidad and Jamaica combined, the entire regional energy hierarchy that has held for 60 years may be rewritten again within this decade, not by Jamaica, but by an entirely new player that barely factored into anyone's calculations a decade ago. These are the threads this channel will keep pulling on, contract by contract, announcement by announcement, verified fact by verified fact, because that is genuinely the only way to understand where this region is actually heading, rather than where the loudest headlines say it's heading. Before you go, I want to hear from you directly, because this channel only works if this becomes a conversation and not just a broadcast. If you're Jamaican, Trinidadian, Guyanese, or from anywhere else in this region and you're watching from overseas, I want to know. Does a story like this change how you think about investing back home, whether that's your money, your skills, or eventually your own return? Or do you think stories like this get overstated and the real economic picture on the ground still doesn't match the headline numbers? I read these comments, and the most thoughtful ones genuinely shape what we cover next on this channel. If this kind of grounded, sourced analysis of what's actually happening across the Caribbean is what you come here for, make sure you're subscribed, because we are building this channel toward 10,000 subscribers specifically so we can keep producing exactly this kind of work without chasing clickbait or empty hype. Every subscription genuinely helps. This is Caribbean Journey. We'll see you in the next one.